Let's answer the question number 3. In the third question, we will be discussing that how to calculate the total cash flow. So the question is that this company shows the following information on its 2010 income statement. So in the income statement, it says the total sales is this, cost and other expense. So it gives us the sales amount, it gives us cost, other expenses, depreciation expense, interest expense, tax, dividend. Moreover, that it also tells that the firm issued $2,600 in new equity during 2010 and redeemed 3,900 in outstanding long-term debt. So it means that the firm issues extra share of worth $2,600. So they issued new equity and redeemed 3,900 means they paid off their long-term debt to the bank or whoever that is. They paid off their debt, 3,900. Now, let's answer the question. The first question is, what is the 2010 or 2010 operating cash flows? So operating cash flows, the equation is very easy. Operating cash flows is if you add EBIT, that means earnings before interest and tax, depreciation, and then if you deduct the tax, total tax, you will get your operating cash flows. All information are given in the question. So the equation is this. So if you just collect the numbers and plug those numbers in from the question, you get this. So our total operating cash flows will be $49,570. Now let's go to the second question. The second question is, what is the 2010 cash flow to the creditors? So the cash flow to the creditor is the interest paid minus any new borrowing. So whatever the interest you have paid, and you need to deduct if there is any new borrowing. So as the company redeemed long-term debt, because they paid off their long-term debt, so the net new borrowing will be negative value. So the cash flow to the creditor is that cash flow to the creditor equal to the interest paid minus the net new borrowing. So this is our equation: interest paid minus the net new borrowing. As you explained just now, that because the company redeemed, instead of taking a new borrowing, they paid off their long-term debt. So the sign of this value will be negative. So in the question, it says they paid in total interest of 8,400 and they paid off their long-term debt of $3,900. So remember, because instead of taking a new loan, they paid off their existing loan. That's why you have negative sign in there. So if you solve this equation, your total cash flow to the creditors will be $12,300. Now let's go to the next question. The question is, what is the 2010 cash flow to the stockholders? That means the stockholders or the shareholders, what's the cash flow to them? So the cash flow to the stockholders is simply the dividend paid minus any new equity. So whatever the dividend the company paid to the shareholders, and you need to deduct if they issued any new equity. So the cash flows to the shareholders is the dividend paid minus net new equity. Both values are given in the question. So dividend paid, they pay dividend of $7,200 and they issued new equity of $2,600. So if you solve this equation, you get cash flows to shareholders or stockholders, which is $4,600. Now let's move to the next question. It says, if net fixed assets increased by $19,475 during the year, what was the addition to the NWC. NWC means net working capital. So the question is saying if the company increased their fixed asset by $19,000 during the year, so what will be the addition in the net working capital? Let's say if the net working capital is $100, for example, so what will be extra net working capital due to the increase in the net fixed asset? So it's also very simple. The equation for this is that cash flows from asset, and which is equal to OCF, operating cash flows, minus the changes in NWC minus the net capital spending. So in this case, in order to find the changes in NWC or net working capital, we need to find the cash flows from asset because it is not given, and we need to find the net capital spending because it is not given. OCF, operating cash flows, are already given in the question, so you just plug the number in. So the cash flows from asset is the cash flows to the creditor plus cash flows to the stockholder. So whatever the money they paid to the creditors, or those from whom they took the loan, and to the stockholders, that means to the shareholders. So both are given in the question. So cash flows from asset, which is this 12,300 they pay to creditor, and 4,600 they pay to the stockholders. So if you add them together, that will be 16,900. So that's our cash flows from asset. Now we need to find out the net capital spending. So net capital spending is simply depreciation plus increase in fixed asset. So depreciation is given in the question, which is 10,900, and the increase in fixed asset, it is also given in the question, because in the question it says if the net fixed asset increased by 19,475, then what will be the addition in the net working capital? So this one is already given in there. So if you add them together, your net capital spending will be $30,375. Now, as we now have the cash flows from asset and net capital spending, now we can easily calculate the change in NWC. So you just need to plug those numbers in here. If you plug those numbers in, this is the equation you get. If you solve this, you get change in net working capital, which is $2,295. Thank you.